What's happened in the markets? 31st July, U.S. President Trump announced a 25% tariff on Indian exports from August 1st, citing high trade barriers and threatening penalties for Russian energy purchases. This move, impacting electronics, drugs, jewelry, and auto parts, caused India's rupee and stock market to drop. New Delhi's hopes for preferential treatment despite trade talks were crushed. Microsoft's profits surged by almost 25% due to a boom in cloud computing. Driven by significant investments in AI, the tech giant's market valuation is set to exceed $4 trillion, with plans to spend $120 billion on AI next year. This strong performance highlights investor confidence in Microsoft's AI strategy. The U.S. will impose a 15% tariff on South Korean imports under a new trade deal, down from a threatened 25%. In return, South Korea will invest $350 billion in U.S. projects, shipbuilding, chips, batteries, and purchase $100 billion in U.S. energy products. Easing trade tensions between the allies, Meta shares surged over 11% after strong Q to earnings and optimistic forecasts, adding $150 billion to market value. This signals Wall Street's confidence as Mark Zuckerberg aggressively invests in a new superintelligence AI lab, reassuring investors about his ambitious AI bet. Complementing Meta's robust advertising business, Federal Reserve Chair Jerome Powell resisted White House pressure and to dissenting votes, keeping interest rates steady for the fifth consecutive time. He emphasized vigilance against inflation risks, acknowledging tariff uncertainties. Powell tempered expectations for a September rate cut, but didn't rule it out, marking the first double dissent from Fed governors in over 30 years. Trump's unexpected 50% tariffs on copper imports, excluding refined metal, have shocked the global market. This move triggered a record plunge in U.S. copper prices, disappointing traders who had rushed metal to America. The decision significantly deviates from market expectations, causing a major disruption to international supply chains and trade flows. The Bank of Japan held interest rates at 0.5% as expected, but revised up its inflation forecast, signaling increasing confidence in meeting conditions for future hikes. This cautious optimism and inflation outlook led to a firmer yen, while Japanese shares largely shrug off the decision. The UK Supreme Court is expected to mitigate the financial burden on banks. Regarding hidden car loan commissions, analysts have lowered compensation forecasts ahead of Friday's landmark ruling. The decision is anticipated to partially reverse a previous Court of Appeal judgment, reducing the potential cost for lenders and limiting broader market fallout. Despite millions of consumers awaiting compensation,